Deciding to close a limited company involves a lot of thought, paperwork and planning. There are several possible exit routes and every situation is different. Perhaps you will sell your shares to someone else who will continue to run the business. Or you may sell the company's assets and shut down the company. Once you have decided to wind the company up, some obligations and relationships must be terminated. Whether or not your company is insolvent or solvent, you must finalise your obligations to all customers, suppliers and employees. A vote must take place before you cease trading to determine if all shareholders with voting rights agree. Once the directors have voted to close down the limited company, they can start preparing for final trading accounts. For corporation tax, once the winding up begins, the current accounting period ends and a new one begins. From this point, the company's accounting period runs for periods of 12 months until the wind-up process is complete. To wind up the business, final accounts must be submitted to HMRC along with the CT600, a company tax return, and the computation of the corporation tax. You must advise HMRC that these are the final accounts of the business and that the company is going to be dissolved. Keep in mind that if all the final liability is not paid in full, HMRC may argue and object to closing down the business. Many directors may decide to sell their shares. This is known as a disposal of shares. Where shares are disposed of, the sale consideration flows directly to the shareholder. This is different to the disposing of assets, where the money will flow to the company and further tax may be payable at the point the money is extracted. This is effectively a double charge on the gains arising in the companies where the money is extracted by the shareholders. This has been mitigated over the years by business asset disposal relief and shareholders in computing their gains on the shares. The relatively recent reduction in the standard rate of capital gains to 18% and now 10% for the basic rate taxpayers. Indexation relief available up to the 31st of December 2017 and frozen from that date. In cases where the vendors are individuals and they want to receive the sales proceeds personally, a simple sale of the company will likely mean lower tax liabilities than a sale of the company's assets, followed by a distribution to the shareholders. This could be in the form of a dividend, winding up, or a mixture of the two. Business Asset Disposal Relief, BADR, previously known as Entrepreneurs Relief, could be available to some individuals if they dispose of their shares in their personal company. When using BADR scheme, you must keep in mind that there is a lifetime limit on the amount of BADR available to the individual. The lifetime limit is currently set at £1 million. Any qualifying gains within the lifetime allowance are charged at a flat rate of 10%. Once the lifetime limit has been hit, any further gains will then be incurred tax of 20%. There are some criteria that must be met to qualify for a BADR. Both of the following must apply for at least 2 years up to the date of the shares are sold. 1. The individual must be an employee or an office holder of the company, or one in the same group. 2. The company's main activities must be in trading, or the company is holding company of the trading groups. This means businesses who undertake non-trading activities, such as investment, would not qualify. There are different rules if the shares are from an Enterprise Management Incentive EMI scheme. For at least 2 years before the sale of the shares, and if they are not EMI, the business must be a personal company. This means that the individual applying for the BADR has at least 5% of both the shares and the voting rights. They must also be entitled to at least 5% of either the profits available from distributing the assets or winding up the company, or the disposal proceeds if the company is sold. In circumstances where the number of shares held fall below 5% because the company wants to issue more shares, the individual may still be eligible to claim the BADR. The earlier you plan and prepare, the more successful the exit strategy. It's not uncommon to see the disposals phased gradually over a period. It may take a few years in some cases. It is always recommended to get expert advice when thinking of disposing of a business. If you would like to know more, please get in touch with us. I hope that's useful. If you'd like to see more videos where we answer lots of questions on tax and accounts, please take a look at our YouTube channel. You can also subscribe for more videos.